Hello everyone, it's good to see you. Thank you for joining us on Managing Your Wealth. I'm your host, Deborah Frazier. Welcome to our program. The goal of our program is to bring timely and relevant information on wealth management topics to you, our audience, and to interview guests who can help impart knowledge that will help you make better and more informed decisions around managing your wealth. Our wealth management topic for discussion today is how community banks contribute to the economic growth of their local communities. And our interview guests are Mr. Pat Ryan, who is the founding chairman of Hopewell Valley Community Bank, and his co-partner here, I would say at Hopewell, Mr. Jim Hyman, or James Hyman, who is the president and chief executive officer of Hopewell Valley Community Bank. So Jim, Pat, welcome to our program.
Thank you, Deborah.
Good morning to you.
Very nice to have you here.
Thank you.
So we're having an exciting discussion today. You know, I love everything connected to wealth management and financial institutions, and we're going to discuss a different type of financial institution, a community bank. Before we do that, I always like to find out a little more about our guests. So, Pat, when I look at your bio, certainly community service, civil commitment, leadership comes no matter what I look at. So Pat is the founding chairman of the board and a director of Hopewell Valley Community Bank. Prior to founding Hopewell, he was the executive vice president of Ritchie and Page. He's done so many things in the community. In fact, the word community service was kind of established when Pat Ryan came into existence. He's been the chairman and former chairman of the board for the Princeton Regional Chamber of Commerce. He's currently the treasurer of the Princeton Regional Chamber of Commerce Foundation. He's also chairman of Mid-Jersey Regional Chamber of Commerce's Joint Legislative Committee. I could go on and on. He's been Man of the Year. He's been he's received the Distinguished American Award. He's received various community service awards. So, Pat, why don't I stop right there? And why don't you tell us, and you're also a veteran. You served our country. You were in the GSA Office of Investigations and the U.S. Army Military Police Corps, serving with the 142nd Military Police Company in Korea, and the Armed Forces Police Detachment in New York City. So you've done so many things, and you've done it with honor. So tell us in your own word a little about your career and your commitment to the community and to civil service.
Well, I was very fortunate to have a number of interesting jobs through the course of my career. But really the one that was really most relevant to what we're doing today was my tenure with Ritchie and Page. Mm-hmm. Ritchie and Page was the local Anheuser-Busch distributor, and in fact still is. Mm-hmm. My father was the distributor. We moved here in 1963, and we sold after his death in 1997, and then I formed the bank. Mm-hmm. But our philosophy was formed at Ritchie and Page. We had a philosophy that we had to embrace the community in all of its aspects, particularly the civic, charitable, and community organizations in the community. And we made that principal pillar of everything that we did at Ritchie and Page. So it was natural, once we sold the business after his death, to go into another business which was very similar. Community banking is, of course, something that is deeply ingrained, if properly done, within the roots of the communities that it serves. So the principles that I learned and acted upon at Ritchie and Page, the connections we made it a very, very easy transition from beer to banking.
Well, I was going to ask you, how did you decide on banking coming from the beer industry? I mean, there had to be many other industries that you considered. How did you decide community bank would be?
Well, I've also, in my career, was also a lawyer. And I was generally familiar with how banks were formed. And back in 1998, there was a tremendous need for local community banks. The New Jersey banking scene was under a bit of turmoil with large out-of-state banks coming in, absorbing local institutions, closing branches, transferring employees, generally roiling the scene and making it inconvenient for customers to use banks. So clearly there was an opportunity. I actually, the way it actually happened was I met someone at a friend at a Chamber of Commerce function. He knew that we were in the process of selling Ritchie and Page, and he asked me what I was going to do, and I thought, well, I responded that I believe I'm going to start a bank. And he said, well, you have to meet Richard Redding. He's a consultant who does exactly that.
Wow.
So I met Richard, found out in more detail what was necessary, and that was not really that hard to do. The hard part was to find somebody who could run the bank, and that's where Jim came in, and so the rest is history.
And the rest is history. So what a great segue into Jim, and another great example of how the Chamber serves its local community. You know, the Chamber does such a great job, and that's where you made your connection to start your whole
Absolutely.
life's work. So that was great. So Jim, thank you again for being here. It's so nice to get to know you more, and you know, you always have a kind face and humor, and you and Pat go together very well. So I'm happy to have both of you here today. Good,
thank you.
Okay, and Jim, when I look at your service, I see political science, I see healthcare, I see banking. You have been the president and chief executive officer of Hopewell Valley since its inception in 1998. Hopewell is a $475 million commercial bank. You're past chairman of New Jersey Bankers Association, New Jersey Bankers Service Corporation, and past president of the Community Bankers Association. You've done a lot with community service, including being the trustee of the Hunterdon Healthcare System, and you have also received distinguished alumnus awards from Rutgers University College. So tell us a little of how you connect political science, healthcare, and your BA was in political science, so that's why I keep mentioning that, and banking. How did you bring those varied interests together?
It goes way back. It's been a long career and a good one. But it actually started with my mother telling me after I graduated from high school I had to get a job. And she handed me the classified ads with a circle around a notice in there that said they were looking for a mail boy at the Carteret Savings and Loan in Newark. I was raised over in Hudson County. Wow. So that really kicked it off. And then after a few years of service in the Navy, I went back into banking upon returning to civilian life and pursued my degree on a part-time basis at Rutgers, and originally had plans because the early part of my career was very much involved in the real estate side of banking. I had aspirations to go to law school, and but with the career change that I experienced, and that exposed me to a much broader array of the banking services that could be provided through a community commercial bank, actually, that I had gone to work for out in Somerset County. I fell in love with the variety of and what the power was of credit and what could be done with it, because my entire career has always evolved around credit and lending money. Okay. So I decided with the move my career took that I would not go on to law school, and the career in banking has grown from those humble beginnings to what it is today. But it's as I say, it went way back.
That's a great
Roots
story.
Are long, yeah.
That's a great story, and I can see part of the connection between you and Pat also with the military service. So, So let me give a little framing about our discussion. Community banks are a very important collection of businesses in our economy. A bank with assets of under $1 billion in assets under management is considered a community bank. There are 7,932 FDIC insured financial institutions in the United States, and 7,256 of these, 7,256 of these institutions hold less than $1 billion in assets under management. We have roughly $13 trillion in assets in the United States, and the 6 largest banks hold or control over 72% of that. So that means that 92% of all our FDIC insured financial institutions, namely community banks, compete for just a fraction of the assets that are controlled by financial institutions in our country. So that means the competition is steep, and we'd like to find out more about the difference between financial institutions and community banks, and what happens with community banks. So let's start at the beginning, Pat. How does one start a community bank?
It's really not very complicated. You only need 4 things to start a bank. The first thing you need is you need a place to have the bank. So you need a lease, a contract, ownership of a piece of property that indicates where you're going to start the bank. You need to have 7 organizers in New Jersey to sign on to organize the bank. You can have more than that. You can have 1770, but a minimum of 7 people have to sign on.
You mean like a founding person? Like
right, as founders. It's sort of like a founding board.
Okay.
Normally, but it's not required, the folks who are the founders will succeed to the bank board when the bank begins operating, but that's not a requirement. And then those, your organizing group, those 7 or greater number, have to contribute 25% of the required minimum capital of the bank, so that you can show to the regulators that they have a serious stake in the success of the institution. And finally, and again, most importantly, you have to find a president of the bank who is acceptable to the regulators.
Okay.
Now, just because you start a bank doesn't give you the right to operate it, nor should you.
Right.
So you need to have a professional banker, preferably one who is highly skilled in credit operations and loan administration, to sign on as the president of the bank, and then approved by the regulators. So once you have those in place, you can apply for a banking charter, and then it's then reviewed by, there's a hearing, public hearing. The process takes a few months, and after you have the banking charter is approved, then you can begin to raise your capital and sell stock to the public. Local banks under exemptions can sell directly to the public shares of stock in what's called a community offering. And this is, of course, a way to really begin the business of the bank by acquiring folks who you think will be future customers, and then folks in the community who have a deep interest and stake in the bank. Proceeding along, once you've obtained your required amount of capital, in the time we formed the bank, the minimum was $6 million, but the regulators preferred you raise somewhere around $8 million. Once that's in the bank, and audited by the regulators, you can open the bank and begin to provide services to the public.
Okay.
Now, if you don't raise the money, then everything stops, and all the losses fall upon that organizing group. Anybody who subscribed to the stock, their money is fully refunded. But the organizers, out of that 25% or greater form that they contributed, any losses that a bank sustains, or a bank and organization sustains, which does not open, falls upon that organizing group. So it's not riskless. It's very much a serious investment for that organizing group.
It surely is, and I didn't know that
Yes.
they experience all the risks. So so that was great background, Pat, and which leads us to the business of the bank. So let me ask Jim. Jim, how does a bank earn its money? How does it earn a profit so that it stays in business?
Okay. Well, you cited a number of statistics earlier, and one of the statistics that is very meaningful, because while community banks hold a smaller percentage of the assets that banks hold in general. We hold a sizable majority of the small business loans.
Oh, okay.
And I think that, you can forgive me for not having it precisely, but it is in excess of 70% of the small business loans in the economy are held by community banks.
Wow.
Which I think proves the importance of the industry. We are a community bank with many others, as you were pointing out before, and I think it has a lot to do with why our U.S. economy benefits so much from the existence of small businesses. And now that ties back to your question. What we try to be is we are a very relationship-oriented organization. It is a business that has evolved with high tech, but it started out as high touch. It is the capacity to be able to have decision makers, local owners, independent from influences from beyond, let's say, the geographic region that we service.
Right.
Everything is decided right where we are. And when we meet with potential customers, and specifically small businesses, because about 85% of the loans on our books is to small businesses and owner-operated businesses. And the capacity to sit down and listen to what someone is doing. It is not a scoring process. So much of what has happened with credit in, let's say, some of the larger institutions has been reduced to an application and a score. That's kind of not the way we work. Of course, we have applications, we have regulations that require us to take certain steps. But it is sitting down and getting to know who the potential borrower is, because we're starting off on a potential relationship that could last 25 years if a company is buying their own business, their own building.
Even more.
Absolutely.
And maybe into the next generation.
It certainly could. And we're looking for the long-term aspect of that relationship. And I think it's building the reputation, people getting to know who you are by being out. You've talked with Pat, and Pat's mentioned it, the public service, the community involvement, it's being out there, being a face, and allowing people to better understand that we're here. And that's principally, along with some good talent that we hired, that brought us to success.
So you're collecting deposits from local customers and then lending those dollars to potentially local borrowers. And I know that you hold loans as a major asset. What other types of vehicles do you hold in the form of deposits? Is it just savings accounts, or do you actually buy fixed income? What are some of the things you do?
Sure. Our assets consist, if you were to break down our balance sheet, about 80% of our balance sheet is in loans. And then there's probably another 15%, between 10 and 15% that is held in fixed income securities. And in those instances, we're frequently buying local municipality bonds, tax-frees, but again, it helps us to fund local economy through local government. And then we purchase U.S. government or U.S. government agency securities. Very limited amount of corporate bonds, and we're much more oriented towards securities that have a very narrow gap between the bid and the ask, because in the event that we are looking to liquefy, if we either want to sell or we want liquidity. And then the remainder of the bank is cash, which doesn't earn much today. It is a burden. It is a major burden. So,
let me ask Pat, what are some of the characteristics that distinguish a community bank from the larger financial institutions? I know we've missed some, but...
Well, Jim said it all when he said high touch. We are very, very close to our customers. When you call the main office or any of the branches, someone answers the phone. A officer answers the phone, someone who can help you and direct you with further information or transfer you to someone who can help. We don't have an answering thing, a phone tree, except in after business hours. We have to be close to our customers. We have to make sure that they're happy and they're satisfied. In the event that we treated our customers in the way that some of the banks did their customers when we first started, I couldn't go to the local market. I couldn't get up and down the aisles without having complaints. And we simply don't feel that's the way to treat any kind of customer-driven business. We try to be as open, as accessible, as friendly, and as efficient as we possibly can with all of our customers, and also to support the local civic community and charitable organizations with whom who are also our customers, but also provide tremendous value to the communities we serve.
So what are some of the ways that you support them?
Well, we do sponsorships of all types. We buy ads, we buy cookies, we sponsor sports fields, we sponsor theater groups, we sponsor choral groups. Literally, it goes almost to the limits of your imagination, what we do. And that's a way to tie us to the community, and also to be a good corporate citizen. As I mentioned previously, in my days of Ritchie and Page, our goal was to be a solid supporter of the community. The former mayor of Trenton, Arthur Holland, a longtime mayor in Trenton, frequently referred to us as Trenton's finest corporate citizen.
Oh, great.
And we strive to do that as well in Hopewell and our Hill communities.
Well, your values are certainly reflected in your banking. I mean, you have a great reputation. I've met a lot of your staff. They're wonderful groups, so good job, Pat.
Thank you.
Now, in your opinion, what are some of the ways that investors can build wealth by participating with a community bank?
Well, community banking, when you find and banking is a risk business. Now, there's no guarantees that just because you start a bank that you'll be successful. Investing in a bank is like investing in any other organization. You have to make sure that you select an investment based on its fundamentals, based on its management, based on its prospects, based on the economic situation and your estimation as it is and how it is going to go forward. We started out opened the doors in 1999, along with 6 or 7 other banks in the state. Right now, there's only 2 of us left. A couple sold out for a nice profit for their shareholders. A couple didn't do well at all. Their investors sustained some losses. Through a combination of cash dividends, stock dividends, growth of capital and whatnot, we've had a pretty steady increase in the value of our franchise as we've gone forward. So it's and nothing's forever. Banks typically combine with other banks at some point in their existence. Some sooner than others, but we're still going along. We're still adding value, and we're still accumulating profits.
I was going to mention, as many of our viewers know, in addition to doing this program, I'm also a financial advisor with RBC Wealth Management. And prior to that, I had a long-time career with another financial services institution. And one of my favorite mutual funds, so this is a little different, was the John Hancock Regional Bank Fund. So that was in the 90s, and my goodness, it's just what you were talking about, the consolidation. There were so many mergers and acquisitions and takeovers, and but that fund did extremely well because of all of that. But then the other side of that is, yes, investors made money, but then our local representation also disappeared. And that happened in a lot of industries.
It did, yes.
I really vividly remember that whole period of time. We don't have much longer. I want to ask Jim 2 questions. One, what are some of the challenges that community banks face? And also, what are some of the careers that community banks offer to the local community?
Okay. Well, I think some of the principal challenges a community bank faces evolve around the cost to do business in an environment which is becoming increasingly controlled by regulation and heightened regulation. Community bank like ourselves, and you know this yourself, Deborah. Every bank is held to the same standard in terms of compliance with regulation, and that is 100%. You certainly not. It's almost impossible to cover every possible regulation, but you must be at least making the effort to do so. So the standard that we have is the same standard that Citibank has.
Wow.
And that's tough because we obviously don't have the staff that Citibank has.
And the legal counsel.
And the legal counsel. So the biggest challenge that I think our industry faces going forward is, in light of all of the additional regulation and the cost to comply with it, is continuing to be able to make a sizable enough profit to continue to attract investment. We can, community banks can make money, but the idea of making sufficient money to be able to provide a return for your investor, that's the challenge. And while I believe we're doing that today, I think a lot of banks are not. They're stuck. And as far as employment opportunities, well, we have a lot of entry-level positions that we tend to have some turnover in them. So there's good opportunity for people for first jobs, great opportunity for those who might be looking for part-time work. And then for those who stay with us, we try to provide as much career advancement as we can. We move up from the inside. In a bank like our own, we grow. And as we grow, we are adding positions just to continue to manage that growth. And when we add them, particularly in those positions where we can train, we are looking at who are some of our best and brightest and who have shown a commitment to customer service and get on board with the bank. And then we look to elevate them into the roles that become available. And of course we hire from the outside. You find the need sometimes for some highly skilled people, and they typically come in the form of lenders or in some instances a manager. And so we're hiring local people, but who are maybe had a change in the course of their career. They no longer wish to commute, and we have some of those who would rather be in the local community.
I can't believe it, Jim and Pat. We really are already out of time. Would you like just a very brief statement, anything you'd like to say to sum up your viewpoint on community banks, any advice you'd like to give to the audience?
Well, we love community banking. And community banking is particularly attuned to the small business person. We're here, we're readily accessible. The first person you see when you walk into our main office is the president, Jim Hyman. We're there for you. Please utilize us.
And where are you located, Pat?
Where the main office is located at 4 Route 31 South, directly across the street from the Pennington Market, which is an iconic institution in the Hopewell area. So we have two iconic institutions directly across from each other, ourselves and the Pennington Market.
Okay. And with that, we're going to have to conclude our program. Jim Hyman, thank you so much
Thank
for
you
being
for
with
having
us
us.
today.
Thank you for having
Pat
us.
Ryan, thank you so
Thank
much
you.
for being with us today. And thank
you.
you, audience. This is Deborah Frazier, your host for Managing Your Wealth.